Hi, I'm Gurkirat Kaur. My student ID is 20173732. We are going to explain our accounting group assignment. Our topic is intangible assets. Identifiability and control. Intangible assets can bring great value to a company, but they can also be difficult to identify and control. To qualify as an intangible asset, it must meet certain criteria, including being identifiable and controllable. Let's explore these criteria in more details. Future economic benefits. Another key criterion for identifying intangible asset is the expectations of future economic benefits. These benefits can take various forms such as revenue from sale, cost savings, and other benefits resulting from using the assets. Companies need to have legal rights to protect their intangible asset to have better control over future economic benefits. Recognition and measurement. In this section, we will discuss the recognition and measurement of intangible assets. Intangible assets are non-physical assets that lack of physical substance but provide economic benefit to an entity. Before an entity can recognize an item as an intangible asset, it must demonstrate that the item meets the definition of an intangible asset and the recognition criteria. Subsequent expenditure is often incurred to maintain the expected future economic benefit embodied in an existing intangible asset. However, it is often difficult to attribute subsequent expenditure directly to a particular intangible asset rather than to the business as a whole. Therefore, only rarely will subsequent expenditure be recognized in the carrying amount of an asset. To recognize an intangible asset, an entity must assess the probability of expected future economic benefit using reasonable and supportable assumptions that represent management best estimate of the set of economic conditions that will exist over the useful life of the asset. An entity use judgment to these assess the degree of certainty attends to the flow of future economic benefit that are attributable to the use of the asset, giving greater weight to external evidence. Finally, an intangible asset is measured initially at cost. It is essential to keep these recognition and measurement principle in mind while accounting for intangible assets. Thank you.
Hi, my name is Pradeep Kaur. My student ID is 20172941, and I'm going to explain about separate acquisition. The probability recognition criteria is always considered to be satisfied for separately acquired intangible assets, and their cost can usually be measured reliably. The cost include the purchase price and any directly attributable cost of preparing the assets for its intended use. Expenditures that are not part of cost include cost of introducing a new product or service, conducting business in a new location, and administration and journal overhead costs. Recognition of cost in carrying amount of intangible assets is in cases when the asset is in the condition necessary for it to be capable of operating in the manner intended by management. Incidental operations that are not necessary to bring an asset to this condition are recognized immediately in profit or loss. Gurkirat, can you please share next slide? Acquisition as a part of a business combination. If the intangible asset is separable or arises from contractual or other legal rights, the reliable measurement criteria is always considered satisfied. In process, research and development projects of acquired are recognized separately from goodwill if they meet the definition of an intangible asset and are identifiable. Expenditures on in-process research and development projects acquired in a business combination are accounted for in accordance. My next topic is acquisition by a way of government grant. Sometimes intangible assets are acquired for free or nominal cost through a government grant. AASB 120 allows entries to the recognition both the intangible assets and grant at fair value or initially at nominal amount plus any direct preparatory expenditures. Now I'm going to ask Sandeep to please explain the next slide.
Thank you, Pradeep. My name is Sandeep Kaur. My student ID is 20173259. Now I explain the topic of exchange of assets. Intangible assets may be acquired through an exchange of non-monetary assets. The cost of the intangible assets is measured at fair value. Unless the exchange lacks commercial substance or fair value is not measurable. An exchange transaction has commercial substance in if the future cash flows of the assets received differ significantly from the asset transferred. The fair value of an intangible asset is reliably measurable if the range of reasonable fair value measurements is not significant or if the profitability of the various estimate can be reasonable asset. After that, internally generated intangible assets. Internally generated intangible assets can be difficult to assess for recognition. An entity must classify the generation of the asset into a research phase or a development phase. No intangible assets arising from research shall be recognized, and expenditure on research shall be recognized as an expense when incurred. In the research phase, an entity cannot demonstrate an intangible asset that will generate future economic benefits. After that, I'm moving to the internally generated intangible assets development phase. The recognition of an intangible asset is subject to meeting certain criteria such as demonstrating technical feasibility, intent to use or sell, and availability of resources. The cost of an internally generated intangible assets includes all directly attributable cost necessary to prepare the asset for its intended use. Thank you.
Yes, my name is Pawan. My student ID is a 20173251, and my topic is a recognition of an expensive. This section discusses the recognition of expensive related to intangible items. Expenditure on an intangible item should be recognized as an expensive when occurred, except when it meets the criteria for recognition as an intangible asset or is acquired as a part of a business combination. Expenditure recognized when incurred. Expenditure on research is recognized as an expensive unless it meets the recognition criteria for an intangible asset. Revaluation models. The valuation model in AASB 138 allows for intangible assets to be carried at their fair value after initial recognition, with adjustment model for any subsequent accumulated and impeachment losses. Fair value is determined by reference to an active market. Although this is uncommon for intangible assets, the frequency of revaluation depends on the volatility for fair values. With more volatile assets requiring more frequent evaluation, increases in carrying amount resulting from revaluation are recognized in other comprehensive income and accumulated in equity under the heading of revaluation surpluses unless they reverse a revaluation decrease previously recognized in profit or loss. Thank you.